Hey everybody, it's Friday, it's the first of the month. Wanted to take a quick second to first off thank everybody that's been able to join us over here on our new YouTube channel. It's been really great interacting with everybody and having a new platform to be able to share some of our content and advice. When we first started this movement of Fire University, called myself Mr. FU for Mr. Fire University, and my wife, Mrs. FU for Mrs. Fire University. And, we use that as a take on also the FU money, which several other people have kind of popularized, but to basically say that, we want to get ourselves enough money and assets and money producing assets that allows us to be in a position to more or less, for lack of a better word, say F you to anyone and everyone. And not even in a rude or antagonistic way, but to be able to just say, if we don't like something, we have the ability and the opportunity to go do something else. That was one of our main drivers. And as with anything, as you begin to focus on something, you begin to see, things manifest because of whatever we want to call it, the reticular activating system, or the fact that we're just hyper focused on something. So we begin to notice it more and more. But, as a upper level executive in the company that I'm with, I just began to notice more and more how the delta or the broad difference that the entry level employees that were breaking their backs on a daily basis to produce the goods and services that all of us consume and depend on, and yet how unfairly paid, compensated, and ill-equipped they were to navigate in the business world, or really just in everyday day-to-day transactions. Not only were the upper level employees better compensated, we all, or at least the vast majority, took advantage of all the perks, fringe benefits such as benefits, and most of us maxed out our 401ks and HSAs and all these different things. Not only because were we better compensated, we were more able to do this. We had more disposable income because we had enough income to meet our basic needs, and then additional income to dispose of how we decided to. We were also educated and understood things like finances and interest and amortization and all these basic concepts that so many people just didn't grasp. And it really began to eat away at me, and realize that those things are what's holding back so many of these people that spend their life doing these things and never advance. And yet you see these upper level executives that not only earn more, they invest more, which earns them more. So it's just a continuous cycle of perpetual growth on one end and stagnation on the other. And it began to make me wonder what I could do as an individual to help change some of these people's lives, even at the most basic level. So I really kind of just started making it my goal. And some of it was pointing out the discrepancies that, we were blessed with expense accounts, and we were blessed with, whether it be company cars or accelerated benefits packages, bonuses based off of performance, and just to go on and on and on, all the added perks that we were afforded on top of all of our exaggerated salary. So I took it as my mission to begin educating a lot of my employees, and one of the first things I did was to really implore each and every one to take advantage of the 401k up to the company match. And from there, we began exploring other areas for them to add more value to themselves as an individual, to justify increases in earning ability or value that they add. And, it began to have a huge effect. Not only were they earning more money, they were investing more money, and you begin to see that the compounding effect that so many people talk about. But, recently, we've all sort of experienced this move away from abundance and more of a scarcity mentality that's sort of engulfed the whole nation, but almost the world. And not to get into a political discussion, I mean, we can obviously all have our different views of what caused this, and it has been in the last couple of years a drastic move from where we were. But regardless of your political views, we do have to accept and acknowledge the reality, and wages are not keeping up with the cost of goods and services. We've seen massive spikes, whether it be in energy, fuel, food, and then, those core staple consumer items hit everybody, regardless. Luckily, a lot of us have homes, and we have locked in mortgage rates or interest rates on our homes, so we're not seeing that influx in the financing costs. But many of our lower paid people are renters, and they're seeing rent increases. You're also seeing home valuations that were just going up and up and up to unrealistic prices that were pricing out a lot of the younger people and sort of just organically disallowing them to become homeowners, which we know from decades of research that home ownership is directly correlated to wealth building and better outcomes for kids, and just a whole plethora of different leading indicators and positive indicators of success at the family and the individual level. So I've really done somewhat of an about face and really just been focusing on how do I help these people navigate through this. And it's not easy. It's been very difficult as a boss. We've been on phone calls with other leaders in our industry and other sectors and other industries, and tried to figure out where the headwinds are carrying us. It seems like every day we look and there's another company, either laying people off or increasing wages to attract new people, and a lot of that is us making bets and forecasting if we're going to if we believe that the economy is going to increase and we want to take advantage of this and still skilled workers, and or we think that we need to batten down the hatches and prepare for winter and make some strategic layoffs and trim the fat and be able to withstand and survive a recession. So it's really difficult knowing. Personally, myself, all the things that I've done as a leader, when you look at whether it be a SWOT analysis or just a industry analysis and forecast, and or even abroad, whether we're looking at a macro or micro level economic indicators, we believe that we're going to hit a recession. We believe that we're going to see a couple quarters of negative GDP growth, and that's going to continue to strain an already strained economy. We believe that you're going to see more and more companies struggle with supply chain, which is going to cause more and more difficulties. We're already seeing the increases in wages that are hitting, whether it's the oil refineries, whether it's the truckers, whether it's the airline companies, whether it's the retailers, but in every step along the way that a good goes through until the final customer, all the wages are increasing of the people that handle or manufacture or package or ship those products. And so as a necessity, those products are going to go up. And as those prices go up, we believe there's going to be a contraction or a pullback at the consumer level that will cause a drop in overall spending. Obviously, just speaking from myself, who is a working professional, and my wife is a executive working professional, and we're very blessed. But when we pay more for every single item, from toilet paper to toothpaste to chicken and turkey and oil and gasoline and our heating bill, when all of that goes up, we are going to go out to eat less. We are going to purchase less clothing and less jewelry and less things. And to be honest, the middle class, the upper middle class, does typically have a lot of the disposable income, and we purchase a lot of the goods that supply or create a lot of the manufacturing jobs and retail jobs and service industry jobs. And so once you see that, the famous trickle-down effect, where, if you want to refer to it that, or a supply-side economics, or, pull or push demand, however we want to categorize it, we're going to see a downstream effect that's going to cause less waitresses, less servers, less cooks, less stockers, and so on and so on, as the demand for them just decreases. So we were really working extremely hard to help people understand that right now, while investing was great when we were in a longest bull market ever, we're now in a contraction-based environment that we need to prioritize liquidity. And as we prioritize liquidity, that means that it gives us the ability to be more flexible to react to our environment. And I'll tell you what really gets me is you see a lot of these self-proclaimed gurus and experts and people that profess to know everything there is about finances. And some of the more famous ones now are screaming, cash is trash. Well, I'll tell you what, if cash is trash, give me your trash. Give me all your trash. I will dispose of it. I will get rid of it, and you will not have to worry about it. But I'm here to tell you that, in my opinion, those comments, that philosophy, is garbage. Cash is not trash. In fact, everything that we have, everything that we use, everything that we purchase, everything that the world purchases, is denominated in the U.S. dollar for the most part. And it is the backbone of pretty much the global economy. Cash is not trash. Now, that may have evolved from or grown from the fact that, yes, during times of high inflation, in an inflationary environment, yes, cash is going to lose value over time, meaning your cash will over time be able to purchase less and less goods and services. But as you know, that this is something that takes place over time, and it's not something that happens overnight necessarily, unless of course we are able to or unfortunate enough to see some sort of hyperinflationary environment, and I highly doubt that. So what I want to do is to be a voice of reasoning, so that so many of the people that barely understand the basics of money can understand that at this moment in time, that if you don't understand credit, if you don't understand how compound interest works as far as against you, the fact that compounding daily interest can be your worst enemy, especially when you're financing items. If you don't understand amortization, if you don't understand points, if you don't understand the basics of real estate transactions when it comes to a deed or a title, all those basics, you definitely don't want to be going out and trying to dump your cash into these assets that are highly illiquid, meaning that it is extremely difficult to turn them back into cash. Same with all these brokerages that we've seen pop up that offer micro or small fractions of shares, where you can go on and purchase a fraction of a share for $10. That sounds great, but if you are in the financial position to only be able to buy a small fraction of a share, you really don't need to be purchasing any shares of any company, because a couple things. Most likely you still don't understand the basics of corporate finance. You don't understand how these companies make money, how the money circulates. You don't understand how to evaluate a company based off of its financial metrics. So, and if you don't understand those things, why in the world would you take the most basic and easily understandable commodity, which is the United States dollar, and put that into something that you have very little understanding or control over? So right now, what I really want to do is to take all these fears and all these worries that are centered around uncertainty and give you a little bit of certainty in knowing that dollars are okay to hold. And if I was you, I would amass me a stockpile, a war chest of dollars that you have that you can deploy. So many famous people that are some of the best investors in the world have said, I want to purchase when there's blood in the streets, meaning that I want to purchase when everybody else is illiquid and selling things for a fraction of what they're worth or what they were purchased for. When people are losing everything they own because it's being repossessed because they don't have the cash, the liquid reserves to cover the banknotes, that's when they want to go out with their cash, with their cash reserves, and begin gobbling up market share, gobbling up assets. Same in the inverse or reverse way. They say, when it's raining money or it's raining opportunity, you don't want to go outside with a thimble. You want to go out with a wash tub, meaning that you don't want to go into an environment where there's deals popping up left and right and only have a very small amount of money to take advantage. You want to have a huge war chest of these dollars to put to work. And they always say you want your money to work for you. You work hard for your money, so you want to figure out how to make your money work hard for you. And it's gotten misconstrued with all these, Instagram and TikTok and all these people professing that you need to own multifamily, you need to own Airbnb, you need to own a car wash, you need to own, your own business in an LLC, because if you have an LLC, you're going to open yourself up to tax write-offs. That's true. But I've never invested in any asset or any business or anything with the sole purpose of tax write-offs. Now, I may look at an internal rate of return, or I may look at specific things, and I don't want to use these high-level phrases, but that may be a perk, but it's never the deciding factor. So what I want everybody that's listening to this, that's taking the time out of their life to listen to what I'm saying, to understand that if you are those people that are struggling the hardest to make ends meet right now, and you're the lowest paid people in your business or your company, the best thing you can do right now is to save your money. Well, I'm not a financial advisor, and I'm not licensed as a financial advisor. I've owned companies. I've invested in many companies. I have done many, many things, and I've run many companies, and I understand it very well. And I'm telling you, from seeing successful people, from seeing unsuccessful people, that you need to focus on accumulating cash so that you are in a position to cover yourselves for a downturn, whether it's losing your job, whether it's increases in the interest rates, which is going to make your credit cards more expensive, and everything on down the line. And then you need to focus on you and making yourself more valuable in the marketplace. And once you do that, once you do those basics, and you begin to then have a foundation that you feel comfortable with, knowing that you can cover any downturn that might happen, then we can look at what are some ways to deploy some of that excess cash. Now that we've created a cushion between, a cushion of liquidity, a cushion between our outflows of cash and our inflows of cash, knowing that we have more than enough coming in. So we feel comfortable knowing that excess money coming in, we have excess cash reserves on the side, and we can put a little bit in for long-term growth. So I want to go ahead and end on that and just thank you, everybody, once again for tuning in and listening to what I have to say. I want to let everybody know that we're going to be putting together quite a few of these YouTube videos. We're working on our podcast, hoping to have it go live in the near future. And we're going to cover all these topics and explain how to go from the low man on the totem pole all the way up to the top, and what it takes to get there, what it takes to be a savvy and successful investor, and more than anything, what it takes to create a successful, happy, and enjoyable life that you can be proud of, and that you can have stuff to give to your children so that they are in a better situation to begin their life than you began yours. So thanks again. Be sure to subscribe, hit that like button, hit that subscribe button, and get ready, because we are going to change your life.